All right, so welcome everybody to our next panel. It's a real pleasure to be part of this Distributed Markets Conference. I'm Lamont Black of DePaul University. I think I'm one of the only academics involved in the program. So I teach money and banking, undergraduate MBA, and as a representative from higher education, I just want you to know we are working on this. There's a lot of interest, I think, in bringing up students, millennials, Gen Z, to think about these issues. So it's a real pleasure to be involved. Our panel today is Discovering and Extracting New Value. We've got Jeff Carter down on the end of West Loop Ventures, Peter Johnson in the middle of Jump Capital, and Vic Pascucci of Lightbank here sitting next to me. So this is kind of our venture capital panel, thinking about how do we extract value in this space. We were kind of joking about the title earlier. I think all of these guys want to bring value to the table, and so we're going to listen to their views on how they can be investing in this space at early stages. So why don't we start with introductions. We'll start with Vic here, and why don't you guys just tell them who you are and what your firm does in this area.
Sure. I'm Vic Pascucci, a managing partner at Lightbank. We are a seed and Series A venture capital firm headquartered here in Chicago. Been around since 2010. We are probably most famous for the entrepreneurial DNA of my partners, Brad Keywell and Eric Lefkowski. I founded 6 businesses, generated about $12 billion worth of value right now. I started working in blockchain and cryptocurrency around 2012. I used to manage a fund inside of a large financial institution, and when someone brought the concept to me that an actual currency got created absent a government and absent a financial institution, I was immediately intrigued and said we have to go all in. So that kind of paid off. That led to investments in companies like Coinbase and some others. So happy to be here. And hopefully we are creating, not extracting value. That's what I'm hoping.
Peter Johnson. I am with Jump Capital, where I've been for the last 5 years. We are a Series A and Series B venture capital firm, one of the largest and most active VCs in the middle part of the country. We invest across a variety of industries. I lead our investments in fintech and crypto. And we're a somewhat unique fund in that we are affiliated with Jump Trading. Jump Trading is a very large proprietary trading firm in the traditional markets and is also one of the largest cryptocurrency traders in the world. So we have a somewhat unique perspective on the market from that affiliation.
I'm Jeff Carter. I was on the board of directors of the Chicago Mercantile Exchange. I actually played college rugby with the founder of Jump Capital. I'm probably the oldest guy in this panel. We started West Loop Ventures to invest in seed and Series A B2B fintech investments. We invest pretty much anywhere. We have 3 investments in our portfolio right now. 2 are in Chicago, 1 is in New York. Prior to that, I started Hyde Park Angels in Chicago, which is probably the 4th most active angel group in the United States.
Great, thanks guys. So what we're going to do in this panel is kind of walk through a discussion of blockchain, then kind of leading into cryptocurrency, all of that with a focus on financial markets. And I think I'll start with you, Vic. One of the questions that I had prepared for this panel in advance was talking about what progress do you see sort of to date on blockchain applications in finance, thinking that we might get some examples of things that are up and running. I have to admit, these guys were somewhat skeptical of the current progress, and Vic had this phrase that he introduced to us, innovation theater. So maybe rather than all of you, Vic, why don't you summarize that and what you meant by that phrase?
Yeah, I think the call just caught us all in a bad time. It was like after a bad Monday morning partners meeting, and we were all kind of a little cranky and irritable. But my background is in venture and then large financial institutions. So I see a myriad of labs and accelerators and incubators doing nothing more than what I was characterizing as innovation theater. Like, everyone wants to talk about innovation because they have to and they should, but when it comes to actually doing things and getting into production, not necessarily seeing the progress I'd personally like to see. I have a great appreciation that we are in the early days. I get it, but at the same time, I'd like to see more things get into production, and I think that's a combination of the large institutions as well as the entrepreneurs. And what we have to realize, it's not similar to what we saw in '99 with the initial web technologies. It's just not technology for technology's sake. Blockchain is amazing technology that can eviscerate innumerable inefficiencies in financial services. But it's more than technology. It's a complete new, different way of operating your business. So having an entrepreneur and a team that understands what it takes to implement that type of innovation and disruption is going to take something special that can be in there for the long haul. So that's why.
Okay, so rather than going down that rabbit hole and we get on like a downer about where things are, why don't we, Peter and Jeff, kind of then looking forward. You know, you guys were in the investment space, thinking about what are the opportunities, and let's stay focused on blockchain for the moment. Sort of blockchain applications in finance, financial markets, capital markets. We're here in Chicago. What sort of optimism do you have? What sort of opportunities?
Yeah, I think the nearest term opportunities are around trading infrastructure, but I guess we'll put that to the side and focus on the blockchain implementations. I think that there are a lot of interesting applications that will come to fruition in not too long. I think identity is at the forefront of that, and that will probably be the next big one. I think titles and putting other kind of tangible assets on blockchains is probably the next thing. So those are the two areas that I'm most excited about.
I think if I think about it, like I think Lamont started out talking about academics, and if I think about blockchain in an academic perspective, it's Coase theorem on steroids, if you understand Coase theorem. I'm a firm believer that financial markets allocate capital more efficiently than centralized bureaucracies, so capital should be able to flow to where it's going to be utilized the best if you have a pure blockchain sort of solution. Immediately, I think token trading and securitized token trading with different business models be very interesting. I was talking to Bhupinder Gill, who was president of the Chicago Mercantile Exchange, is an old friend of mine because I was on the board there, and we were talking about pricing, and he said, how do they price these things? And I said, it's notional value, and he said, that's the holy grail. If I could have gotten notional value at CME, I'd still have a job, you know? So I think it's going to be very interesting to see the infrastructure develop first and then the implementation around that after.
So Vic, one of the phrases you used when we were talking earlier was democratization of finance. Jeff, you know, we're here distributed markets as this sort of utopian vision. And I think many people would say that blockchain has the power to potentially move us from sort of concentrated capital to more sort of power to the people investing. Do you buy into that? Tell us what you mean by that phrase, democratization.
Yeah, I mean, I think, you know, all of us that have worked in financial services for a while, you know, you just see the incredible opportunity for people that have essentially been locked out of traditional financial tools and planning and access to things. And, you know, if you take a fundamental technology that eviscerates, I keep using that word, I'm sorry, all the waste that's in whether it's banking, securities, insurance, and therefore you can create a system or a product or underwrite an individual based on the value you're going to provide them, as opposed to legacy infrastructures and mainframe systems that you have no choice but to charge ridiculous fees to your consumer so that you can keep your bloat up. So I think, you know, that's kind of the utopian, the kind of vision, and I think the difference is there's the vision, and then what do we do to get there? And I think, you know, within financial services, we've got like the interim steps we can take around asset tracking and smart contracts and identity that will get us on the way to those broader implementations. So whether it's, you know, the other side of fintech, the insurance side with smart contracts and asset tracking, to get that adoption and utilization and then use that as kind of the foundation to start these broader initiatives.
Okay.
By the same token too, though, I think that the iron laws of economics apply. So like, I've seen, we don't need to understand the old rules of economics, and I think that's bullshit. I think if you read like the economics of a POW camp and they traded in cigarettes, you know, or you look at prisons today that trade in ramen and tuna cans and cigarettes, it's endemic to the human condition that you want to make gains from trade, and this just makes it so much easier. So it breaks down transaction costs, which is why Coase theorem applies, and it becomes really interesting that when you look at it that way, rather than first of all, the banks aren't going away, exchanges aren't going away. They're huge behemoths. Nobody's going to upend them. They're going to wind up buying this technology. But in the meantime, there's dark markets out there. There's anti-competitive markets. There's markets with lots of transaction costs where blockchain can come in and just sweep it away and reallocate the assets so it's a lot more efficient, creating a lot more gains for everybody. And I think that's the promise, right?
Yeah. Yeah, no, I think, when I talk to my students, many of them are still, I think, skeptical and almost anxious about what could this new technology mean, because there isn't a clear governance structure. But, I tell them, in some ways, this is potentially capitalism on steroids, a true libertarian. You draw a supply curve, you draw a demand curve, and that's your market. So I think it is very promising. Peter, you mentioned trading infrastructure. I think with this conference being here in Chicago, in our history of financial innovation, the derivatives markets, when you think about the trading community and the infrastructure supporting that, and you think about blockchain or cryptocurrency, how do you see that starting to infuse that part of our financial system?
Yeah, so I think it's become increasingly clear that digital assets are going to be the next big asset class for institutional investors to invest in, and it's only a matter of time before endowments, pensions, the big investors are in this space. And there is, some people talk about kind of this institutional wall of capital that's coming. I believe it is coming. I think it's going to take longer than a lot of folks expect, though. And the reason is the infrastructure isn't there for these folks to come into the markets yet. There isn't good custody solutions that they feel safe storing their assets there, and they meet regulatory requirements for them to hold their crypto. Exchanges, by and large, many of them aren't trusted still. There's not good reporting, there's not good compliance, there's not good order management, execution management. All of these things that you need, an institutional investor needs to play in this space, those things are still being built and invented. So until those building blocks are in place, I think that's what's needed for the real capital to come into the markets.
Yeah, I think Bitcoin's, if you think about the New York Stock Exchange, it started with a contract under a buttonwood tree. That's where Bitcoin is now. It's a bunch of guys that are meeting on the corner. When you talk about institutional stuff, on the board of CME, I remember talking to different people starting exchanges, and anybody can match trades. It's how you're going to settle, how you're going to clear, how you're going to hold, how you're going to margin. I had somebody say, we just do margin at 20%, and I said, 20% of what? And they're like, 20% of the value of the trade. And I'm like, oh, accounting margin, you're going to blow up. You're guaranteed to blow up. How do you handle counterparty risk? These are big issues for institutions. And if you're a big trading firm or you're a big hedge fund and you have LPs, you can't go back to your LPs and say, you know what, we lost a third of our thing trading cryptocurrency assets because we thought it was a good trade, but we didn't understand the rest of the infrastructure behind it.
But what's nice about, even you go back to the endowments and the pension funds, and if you think about it, their job essentially is to make the money last forever.
Right.
So if we can get that long-term view of capital coming in, I think that'll be great for all of us. And it's just a matter of, do we have those right railroads and infrastructure for them to get comfortable there? Obviously, we're seeing some that are comfortable and some that are not, but I think that's the right type of huge pools of capital we need to provide that stability to what we're doing around all these assets.
Yeah, so it seems like there's still this landscape or environment which is still very new and innovative, which I think is part of the excitement and optimism. But we've also talked amongst ourselves about some of the misguided efforts to apply blockchain. I'm sure all of us here are aware that this is the new buzzword and there's a lot of excitement. And as Vic kind of started this panel, the innovation theater, talking about different companies doing this, but I think many of the big firms are trying to innovate and they want to be blockchain friendly, but you guys are more so in the startup space. So how do you separate the wheat from the chaff? So when you have people coming and pitching ideas to you, we've even seen some of that earlier today, and they say, we're the next best exchange or we're the next best token provider. How do you decide what's a good application of blockchain and what's misguided?
I have two simple questions that I think can narrow it down pretty dramatically. One is if whatever you're saying that you're using a blockchain for, if you're going to replace the word blockchain with database, you should. If it works the same with a database, use a database. It's simpler. And the second is, do the benefits of removing a trusted third party from whatever you're doing outweigh the downsides of increased computational cost, slower computational speed, and uncertain governance that comes along with using an open blockchain? Mm-hmm. If you can answer those two questions in a way that is favorable for a blockchain, then it makes sense. If not, then probably not.
So, because we invest earlier at the seed and Series A, and it's the same for the rest of my friends on the panel. There's the application, but then most importantly, it's the team. Yeah. So is this the team that has the credibility and self-awareness? And I don't care if it's a consumer application, because there's blockchain applications trying to change the way consumers run their daily lives, let alone those ones that are selling through and around financial institutions. So are they the type of team that has the credibility, has the presence to convince an entire organization or an entire industry to do something different? And not just use new technologies, but fundamentally change the basics as to how they operate. So I'll look at the team, and are they the right team? And is that team going to then be able to recruit and bring on the next layer of talent around them to make these into huge multi-billion dollar businesses as measured by revenue, as opposed to other things. So, I'll start there, and then I'll ask the same questions that Peter does about the technology itself. It was one of those cranky Monday afternoons. I'm like, if I see another entrepreneur come in and pitch that says, oh, and we're on blockchain too. I'm like, really? It's not a freaking afterthought, right? You got to answer Peter's questions, the very fundamentals. So that's.
But what if I said, I have blockchain with a big data algorithm that uses artificial intelligence
and machine learning,
and it's gamified,
and it's cloud-based.
Right. I think if it's core to your DNA and it's solving a real problem, and you're using the elements of blockchain, which is permissionless based systems. So a lot of stuff we see, it's like, well, only these people can use it, or only these people can use it, or we're going to pre-qualify these people, and essentially that's a database, that's a clearinghouse. The DTCC just said they're going to start embracing blockchain, but it's really a permissioned blockchain. It's no different than what they're already doing. It's just a cheaper way to run the technology, and they can show that they're blockchain enabled. But if it's core to your business and it's solving a real problem, we have one business that we're invested in, CFX, where it does. And so we kind of were like on board with it after they presented it to us. We didn't invest in the business thinking that they were going to get into the blockchain business, though.
Yeah. There was some discussion on our panel earlier about these private permission blockchains. And in case you're curious, like, these guys are somewhat skeptical of these large firms trying to sort of use the name blockchain, but it's really just this small network, and it still has this governance structure that's centralized, that it's questionable whether that's really blockchain, right?
It's a private VPN, for Christ's sake, right?
Yeah.
So it's like, I don't buy into those.
It's a country club.
Yeah, and like I said, the teams they're all different types of teams. Like when I met Fred and Brian in 2014 at Coinbase, like, you just knew when you met them and how much homework they'd done, and they just knew the space inside and out, both crypto and blockchain and financial institutions and markets. I mean, they could go deeper than anybody I've ever met, but you just knew it was that type of passion, that type of insight that was going to build this thing that was around it.
Yeah. All right, let's move on to cryptocurrency. So some of the other panels and speakers have thought about sort of investing in cryptocurrency itself as an asset, but that's not really what you guys do. You're more sort of investing in the entrepreneurs who are working in this space. So when you guys think about cryptocurrency, where do you see the opportunities there? There was a discussion earlier today about how, maybe 5 years ago there was a lot of excitement about crypto, but people were kind of skeptical of Bitcoin and money laundering, and so then people got very excited about blockchain because it was sort of like all the benefits without the stigma. But now with kind of the expansion and explosion really of the cryptocurrency market, many people are now getting excited about ICOs and new currencies again. And the role of new startups in terms of exchanges and asset managers. Where do you guys see opportunities in cryptocurrency, especially in this sort of financial markets space? Want to start?
Sure. So as far as like new cryptocurrencies, I think that they need to be building something that is fundamentally different. As of last count, there is, I don't know, 2,000, 3,000. I've lost count of how many cryptocurrencies there are now. There's clearly not a need for that many. There's not that many unique use cases where Ethereum or Bitcoin will not work as a transfer of value in that network. There are many legitimate reasons to have unique coins, but it's clearly well overdone right now. So we don't invest in ICOs, but when I'm looking at kind of is this a valuable new cryptocurrency or token that's being launched, I look at it, how is it unique and why can't Ethereum or Bitcoin do what they're proposing to do?
We have a sister fund, and there's a manager that shares the same desk with me, and there's a pool of capital. All he does is currencies and tokens, and I think it's kind of the same thing that Peter was saying. Like, what is the unique differentiator that this token and/or project has that's going to make it win? But I think that, as well as the stuff we're doing, you have to be so long in your view, and you have to get such a portfolio effect to it that you just have to have your beliefs, have your mindsets, have your guideposts, put your money to work, and then be ready for the ride.
Yeah, I think for new tokens, you have to create a network somehow. So there's got to be, there's different ways to solve a business problem. You can use a centralized bureaucracy, a vertically integrated thing, or maybe you can use a network, right? And they compete all the time. You see it in traditional businesses. At CME, it's funny. There's a guy I know, his name is Jeff Minch, and he likes to tell entrepreneurs, you didn't invent sex. And CME, when we demutualized in 2000, we essentially created tokens. So we had this thing, and we split off the seats, which became, or memberships, which became the B shares, which gave them access to the clearinghouse. And we had to staple 1 share of stock to that seat to make it a tax-free transaction. That's a securitized token. So I think the big avenue in the future is maybe securitized tokens, not just commodity tokens, where owning that token gives you the right on some claim of some cash flow or decreased fee to use this blockchain, or there's some advantage to owning it. And then there's network effects around owning it.
Okay.
And I think those could be successful. Like, one that comes to mind that's interesting to me is Filecoin. I'm not an investor, I don't own Filecoin, but it's interesting. Just the rudimentary economics behind it are really cool.
So if we think about these kind of utility coins and something, let's say there's a coin that does have a unique position, that it does bring value, that it does function within this local economy. A lot of people talk about the initial coin market as sort of like crowdfunding 2.0. And just to circle back to the democratization of finance, like some people would say, well, now I have this idea and I don't have to go to the old boys network, no offense, but I can go to this more public source of funding. Like, I know there's a lot of talk about fraud in the ICO market, but do you think that it has a role as sort of a substitute to VC funding? Can it function in that way?
I don't know if anything's a substitute as much as it is another potentially viable option. We'll see how these things play out over time. It just takes one bad news headline for it to get a knee-jerk reaction. I don't want to see that happen. Anything that, provided it's not fraudulent and there's adequate disclosures and people understand the risk of what they're doing and they understand who the managers are of these ICOs and what they're doing, I'm fine with it. There's a time and a place for all those types of things.
Yeah, I think there's a time and a place, and I think it's important to thinking about, like, will ICOs displace venture capital? Like, what is really the difference between an ICO and a venture capital round? One is what is the startup selling? In a venture capital round, the startup is selling equity in the company, a right to the assets of the company, and typically some sort of voting and governance rights. In an ICO, the company is selling private keys. that serve a function on a distributed consensus ledger. So you're selling fundamentally different things. And then there's also who are you selling to? Venture capital round, you're obviously selling to VCs. An ICO is typically crowdfunding. They're selling to a wide variety of folks, but you can also do an ICO that's being sold to VC. So you can put that in kind of 4-quadrant box, and I think there's times and places for all 4 of those. But the quadrant where historical venture capital has taken place, selling equity to venture capitalists, I don't think is going anywhere because that's the instrument that kind of makes the most sense for most companies to sell, and the entity that it makes the most sense for most entities to raise money from.
Yeah, I mean, if I talk my book, I say venture capital is not going away. There's advantages to venture capital. You have governance structures, you have things like that. If I flip it on the other side, I'll say the same thing about ICOs that I said about crowdfunding. Somebody said, do we need angel groups with crowdfunding? I started Hyde Park Angels. I think if you're a VC, you have to show how you're going to add value besides being commodity money. ICO money is commodity money. There's no value in it other than you get the cash. If you're a good VC, you're not just writing a check, and you're not just sitting on the board looking at accounting statements. You're mentoring, you're talking, you're making introductions, there's a lot that goes into being a VC outside of just sitting on panels and writing checks. It's a lot more nuanced job than people give it credit for. While our risk is distributed, we feel the entrepreneur's pain if we're empathetic at all. So I think there's room for VC. ICOs are great for what they are. It's like a Kickstarter. It's a proof point. If the entire community buys into it, I mean, that's a pretty good indication, right? If it's smart money. You got to figure out if it's smart money, though, or just money trying to get out of a kind of jurisdiction that needs money to get out of it.
Yeah. Okay.
Putin,
Great.
Russia.
So I've got one more question. I think we're actually going to have time to take 1 or 2 questions from the audience. I don't know if we're set up with a microphone or not, but if you just kind of speak loudly enough, I'll probably be able to hear it and then relay it. So do we have a microphone? Yes, we do. Okay. So if anybody has any questions, be thinking about and shoot up a hand. Last question for me: regulation. From previous conversations, I think the 3 of you are pretty similar on this, but Vic, I remember you speaking about this as to whether that it's more kind of regulatory uncertainty or whether you think it's sort of a necessary and good thing that this is slowly evolving. What are some of the benefits and costs of that? You want to speak to that?
I think regulation will be necessary anytime you're moving this amount of capital around. But I like more policy-driven regulation as opposed to rules-based regulation because we're dealing with something completely new and novel and innovative. Trying to shoehorn new technologies into old regulatory regimes and rules-based is not going to work. In my experience, it will create the exact opposite of what you need. And what you need is fairness. You need something that fosters innovation. You need validation, you need some transparency. And I think the current rule set structure that's been in place, no matter what you're talking about, since 1941 or even earlier, doesn't take into account what we have now. So I think, to take the time with the regulators so that they can dig in and adequately understand what's going on and what the risks are and how they can protect the consumer, yet foster innovation, is going to be the holy grail in this. And I think there's enough smart people looking at this and trying to work together for that end goal that we should be able to figure it out.
Cool. All right, we've got 4 or 5 minutes left. Any questions from the audience? So I have a hand. Yeah, Susan. If we can get a mic over to Susan, or you can just go ahead and stand up and start.
So do you think that with there already being regulated exchanges and markets out there, that those entities will be able to whip up cryptocurrency markets and exchanges using their knowledge of the SEC rules already in place, and that they will be displacing the independent digital currency exchanges in existence today?
Is the question, will the existing exchanges spin up cryptocurrency exchanges and take the space away from independent exchanges or startup exchanges?
Yes, like the old money running all the exchanges. I'm not a financial expert, but yeah, you get my question.
So when I was on the board of CME and we were switching from nonprofit to for-profit, one of the things we thought of was we can list any contract. It's an electronic thing. And you can list as many as you want. But the simple fact is exchanges are not that innovative. They have a corporate culture that they have to deal with. And they have resources as well. So they can only go after so many markets at one time. And so what I think they're going to wind up doing is buying innovation. So they'll wait for people to build a market to a certain point, and then they're going to buy it. You already see Coinbase starting to do this already. There's a market, so CME is a commodity market. Pecans are a totally fragmented market with huge risk, and they don't go after it because it's just too damn small for them to go after. And then, you know, to tag on what Vic said about regulation is if you look at the CFMA that was passed in 2000, it made over-the-counter derivatives legal. It gave legal certainty to them, and the market took off after it did. And so I think once there's a little legal certainty around this, exchanges will sit on the sidelines, other exchanges will build up, and the market's going to get much, much bigger than what it is today.
Great. Another question? Yes, right down here in front.
On which the IBM blockchain is built, playing out in the future.
Okay, so the question, if you couldn't hear it, was we've talked about permission ledgers, but what about the role of something like Hyperledger or these other types of protocols?
You know, I guess I would key off a little bit more at the very end of your question when you said that's going through IBM, right? You know, some of us have been on the side.
Just a quick, Hyperledger is Linux.
But
Yes, so IBM is just a partner of Linux, just for the record.
I get concerned with them selling anything into large enterprises, right? And so that's where it gets real. Like you've got IBM trying to selling their blockchain solutions into large enterprises. You know, reminds me of what they tried to do with Watson and how much success they really have. But I think the bigger game changer is going to be now that Oracle's selling it and selling blockchain services. You know, those that have done enterprise sales for a long time, like that sales team sells, right? It sells like none other on this planet. They will come in like stormtroopers and large enterprises will buy theirs. So I think we'll see some interesting things happen there.
Final question? I think we've got the mic in the back. Sorry, this is the last one.
Do you have any recommendations or a wish list of problems that you would like entrepreneurs to attack?
We couldn't understand that.
Which problems for entrepreneurs to attack?
Do you have like a wish list or a set of things that you don't see that startups in the industry aren't doing that you would want to happen?
A wish list for startups to work on?
Yeah.
Things that they're not doing that
So
they should be doing.
a guy comes into your office and pitches and you go, that's the idea I was looking for?
So I would say, as far as financial trading infrastructure, look at the full stack of technology that exists in a different market, like the FX market. And then what parts of that stack, everything from prime brokerage, banking, order management, execution management, clearing, settlement.
Pre-trade.
Yeah, just go through all of that, copy it over to crypto, and say what are the pieces that are missing? Most of those pieces are missing right now, and where can you build the best solution to fill one of those gaps?
On wealth management, if you look at wealth managers' fees have been crushed, the funds' fees have been crushed, but the third-party administrators are still making a shitload of money. So if you get rid of them with a blockchain solution, that would be a good one.
Yeah. And ultimately, that's the vision, right? These third parties, how do we make these markets without them? So, all right, I think that's all the time we have. So let's give it up for our panelists.